Is Las Vegas's housing market about to get hit by the impending mega housing crash everyone has been waiting for in 2024? This is a question I know a lot of you home buyers and investors out in Las Vegas and Nevada more broadly want answers to, and I will provide those answers to you with data in this video. With the first thing here that we need to look at are overall home values in Las Vegas, particularly how much they've gone up over the last several years. You can see that prices have surged by about 33% from their pre-pandemic levels in Las Vegas, and they've actually started to go down, with values now down about 5.3% from their peak in mid-2022 to a typical home price of $406,000 across the metro. However, despite those initial declines, prices in Vegas are still really expensive, especially for a population that's employed in the service industry with, let's just call it, an average to slightly below average income level, with the median household income in Las Vegas registering $74,000 a year. You can see that while this income level has gone up over the last couple of years, it has not gone up nearly as fast as home prices, resulting in a home value to income ratio in Las Vegas today of 5.5. Home prices are 5.5 times median incomes, which is substantially higher than the long-term average of 4.3 and uncomfortably close to the bubble that we saw in 2006 before prices came crashing down in what was the most brutal housing crash the US has ever experienced. Home prices in Vegas crashed by 65% in this last downturn. Now, I don't think we're going to see anything like that in this downturn. Prices in Las Vegas, they're not going to crash by 65% again, but could they go down another 20%, maybe another 25%? I think that's something that could definitely happen over the next couple of years, given how overvalued the Las Vegas housing market is today, given how expensive it is. However, to see those declines manifest, we will need to see more inventory of homes for sale hit the market, because this has been kind of the, let's just call it the constraint or the limiting factor on the Las Vegas housing market over the last couple of years. Is it just really hasn't been that much inventory. Because for instance, if we go on Zillow and look at Clark County, Nevada, and actually, I'm sorry folks, someone recently told me it's pronounced Nevada, not Nevada. Clark County, Nevada, we can see there's 5,600 homes for sale right now. 5,600 homes for sale. Let's just see what we got here on the market. We got actually a $150,000 price cut here on this luxury $1.1 million home. Let's actually see what's going on there on this house in Henderson. This is a 4-bed, 3-bath. Looks like it's near a golf course that doesn't get much water. This is actually a house that sold for $416,000 at the bottom of the last crash in 2012. They then listed it for $1.3 million in late December and have now cut it by $150,000 in February. They'll probably have to cut this by more because the mortgage payment on this house at a 6.75% mortgage rate would be almost $7,000 a month or $84,000 a year. That's really expensive. There's not a lot of people in Las Vegas that have the type of money to pay that price, which is one reason that we've actually seen a bigger downturn in the luxury market in Las Vegas. Done a bunch of shorts that you guys might have seen on the Reventure Consulting YouTube channel, where there's definitely a lot of luxury homes cutting the price, but not as many in kind of like, let's call it the starter home arena. Like, let's check out this listing here, $385,000. This is also in Henderson. It's a 3-bed, 3-bath, 1,400 square feet. This is like the type of house you would buy, if you're just trying to start a family soon. You can see Zillow actually thought the value of this house was $304,000, but they listed it at $385,000, which gets you about a $2,300 a month payment. And as a result, you can see this house has a lot of interest. Only 3 days on Zillow, 2,700 views, 250 saves. That's a lot in terms of interest in only a couple days on Zillow. So these cheaper prices in Vegas still are getting some buyers coming through the door. Many of those buyers who are buying in Vegas, they're buying at a price and a mortgage rate that they can't really afford. Vegas is known kind of as a housing market where when people buy, they tend to stretch beyond what their income limit tends to be. There's often a lot of high DTI mortgages in Las Vegas, 35, 40%, maybe even 45% debt to income ratios in Las Vegas are common. So I wouldn't actually be surprised if we eventually see the foreclosures and the mortgage defaults in Vegas pick up, because there is a lot of underlying, economic risk in the economy. People are stretched, and this is a market that in the downturn, the foreclosures tend to go up by a lot. Folks, I want you to look at this graph. This graph tells you a lot of what you need to know about the risks of buying into the Vegas housing market. It's a mortgage default and foreclosure graph historically in Las Vegas, according to data from Fannie Mae. And what do we see? In that last bubble, folks, the foreclosure rate in Vegas went up to 10% in 2010, meaning that in 2010, 10% of all the mortgages in Vegas were in foreclosure. 1 out of 10. Absolutely insane. That's why prices went down 65%. Now, fast forward to today, you can see that only 0.1% of all the mortgages in Vegas are in foreclosure. I mean, this is way below the long-term norms. I mean, a lot of it has to do with kind of all the government programs that occurred during the pandemic to prevent the foreclosures, and then they did extensions and forbearances and things like that. But I think we all know that this 0.1% foreclosure rate in Las Vegas is not going to sustain itself, especially with the 30 to 60-day mortgage defaults now starting to tick up. So this is something to watch on an ongoing basis. If you're a home buyer in Vegas or Nevada more broadly, mortgage defaults are starting to trend up, still historically low, meaning that these almost minuscule foreclosure rates are going to increase at some point. But really, folks, what I tell, the home buyers and real estate investors I work with who are looking at buying is that it's not enough to know about what's going on in your state or your metro in terms of housing market trends. You also have to know what's going on in your neighborhood and zip code. Whether you're in Vegas or in Reno or in Perhump or in any of those markets, there's big differences neighborhood by neighborhood. And as a buyer and investor, you got to key in on those differences and understand what's going on so you don't make a mistake. Like, for instance, let's actually look at Reno for a second before we head back to Vegas. Let's look at the different zip codes in Reno. And let's just look at like the trend in home prices over the last year across Reno. We see big differences. For instance, in downtown Reno, prices are down 8.5% over the last year. In North Valley, they're down by 1.6%. Some more moderate declines here of 1 to 2%. And if we change this data point to how much home prices have changed since the peak of the bubble in June 2022, we see even more differences. So for instance, in downtown Reno, prices are down 13% since the peak of the bubble. Here in Mayberry Highland Park, they're down 10% since the peak of the bubble. So we actually have some fairly substantial declines across Reno's housing market. Now, if we shift back down to Las Vegas, we can see a similar diffusion in terms of how prices are trending since the peak in mid-2022. You can see actually like in North Las Vegas, prices are only down 1.4%. Moderate drop. You wouldn't even notice it. But then if you head down towards Enterprise or Southwest Vegas, we can see minus 7.3%. In parts of Henderson, we have minus 7.2%. Those are bigger declines. So it's often, I think, actually correlated to where most of the home building is in Vegas. If we look at a data point here called housing unit growth rate, you can see the areas with the highest housing unit growth rate here in red. They're the ones where prices have dropped the most. And what I would encourage you guys to do at the end of this video, don't do it just right yet, but at the end of this video, I would encourage you guys to go to Reventure app, which is the program I've been using in this video to show you all this data. You can actually access this data for yourself on Reventure app as a home buyer and investor, so you can make a more educated decision. I'm going to tell you at the end of this video how you can do that. But first, let's analyze the Vegas and Nevada housing market a bit more. Another metric I like to look at here in terms of understanding potential trends in prices is a metric called overvaluation rate. How overvalued home prices are or undervalued in different areas. And what we can see is that actually we have a lot of heavy home price overvaluation in North Las Vegas on the north side of town as well as on the east side of town. 50 to 60% home price overvaluation compared to long-term norms. You can see prices were actually very undervalued in these areas in 2011, 2012. This would have been a great time to buy. Then they were fairly valued around 2017, 2018, and then they became very overvalued again. So I wouldn't be surprised if eventually we see a correction in these markets in deep red. Whereas interestingly here, if we look on the Las Vegas Strip, prices are actually 8% undervalued on the Strip. This is mostly going to be condos. You can see that values here crashed in the last downturn, and they never really recovered relative to income. But again, folks, in order to see, let's just call it the substantial declines in home prices in Vegas that you want to see as a buyer for things to get more affordable, we're going to have to see more inventory. We're going to have to see more forced selling. We're going to have to see more foreclosures. And we're going to have to see more investors sell. The investors, they've started to sell in Vegas. Something I've seen more and more on my trips there. Some of the big Wall Street investors are now getting out of the market. That's a sign that there could be a downturn. However, not enough people are selling because there's currently 4,800 homes for sale in the Las Vegas metro area. And if you guys actually go on Reventure app at some point, you can see you can actually look at this data for every market in the US, not just Vegas and Nevada, but every market is here. But if we just look at this inventory, we can actually see that this 4,800 homes for sale, it's one of the lowest levels on record over the last 7 years. It's actually close to the low we experienced at the peak of the bubble in January 2022. You can then see the inventory spiked, which caused prices to drop. Now the inventory is way back down, which is causing prices to stabilize and even go back up in certain markets. So, and if we change it to monthly, this doesn't look great in terms of inventory. We're going to have to see more inventory go on the market, kind of like what we saw in the middle of 2022. But once again, everyone, there's big differences based on the neighborhood you're buying in. Some areas in Vegas, they have no homes for sale and the prices are going up. Other areas, there's actually a decent amount of inventory and the prices are dropping. And one way to figure this out is to actually go on Reventure app, www.reventure.app, and change the data point to home price forecast score. And we can see there's actually big differences across the Vegas metro. We have some zip codes that are ranking as a 36 on the home price forecast score, meaning it's a buyer's market, meaning that we're likely to see more price declines, whereas other areas are like a 59, meaning that we are actually back to a seller's market here in 89161, which is primarily due to a lack of inventory. You can see the inventory score for the zip code is a 79. The days on the market score is an 80, meaning very low inventory, very low days on the market, which means upward price pressure. And overall, if I'm being honest, if it were me, I would not buy in the Las Vegas housing market in 2024. I think it's a bubble. I think there'll be a correction. I eventually think we're going to see more inventory, but ultimately that choice, whether to buy or not buy, it's really a personal one based on your financial and family situation. And so if you want to make a more informed decision about buying a house or investment property in Vegas or Nevada, I would encourage you guys, go to www.reventure.app and type in your city and start looking at the housing market data in your area. You can look at data on home values and inventory levels for free, while overvaluation rate and the home price forecast, as well as demographic data points on population and income growth, require a premium subscription at $39 a month that you are able to cancel at any time. So head to www.reventure.app to check out the data for your housing market right now.